The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Juliana Tuttlbaum. These are your headlines. UK Chancellor Rachel Reeves looks set to lay the groundwork for tax hikes in an unusual pre-budget speech this morning, as the Prime Minister, Sir Keir Starmer, warns of tough decisions ahead.
Philips raises its full-year margin guidance after posting 3% sales growth in the third quarter. We'll speak to the CEO, Roy Jakobs, in just a few moments. And another flurry of big AI deals, with OpenAI penning a $38 billion pact with Amazon, while Microsoft wins approval to ship NVIDIA chips to the UAE. Microsoft President Brad Smith tells CNBC he believes AI investments will yield returns.
Our greatest challenge is not the risk of getting ahead of demand, it's in keeping pace with demand.
A busy old day ahead of us. The next 90 minutes is going to be wild. We've got this pre-budget speech coming from Chancellor Rachel Reeves, and it feels as though she is going to be spelling out some very tough action to come in the budget. Very unusual to have this set in the calendar today. So that'll be fascinating. Technology numbers overnight. We have this mega deal between OpenAI with Amazon to take some of its services. $38 billion puts Amazon right at the forefront now of the AI race, so that is significant in terms of powering earnings, and a big theme in the backdrop around what the Fed could do in terms of cutting rates as we get corporate earnings rolling across the tape still.
Well, let me just quickly pick up on Rachel Reeves, given that that is perhaps the most pressing from a time perspective. We're due to hear from her just after 8 o'clock this morning. And as you said, this is fairly unprecedented to do this pre-speech before the budget. My sense would be that she is, given the change in rhetoric we've heard from both her and Keir Starmer, she is preparing, using this as an opportunity to try to get the base, the voter base, comfortable with the idea that they could break their manifesto pledge come November 26th and actually hike taxes. That's what's being mooted right now, what's being floated by various news outlets, that we could be looking at tax hikes in November.
Can I also say the market investors, because if you look at the trade this morning, sterling is down. And it is a dollar weaker environment at this hour this morning. So other currencies are actually firmer versus the US dollar. So I think there's a little bit of a market trepidation ahead of the announcement this morning. But let's get into the detail. We've got a ton of earnings. We've got Shell and Philips already this morning. BP, I should say.
Let's kick off with BP right now. We've got BP numbers just crossing the wires, Q3 results. In terms of what they are seeing, they are looking at all 6 of their major oil and gas projects planned for 2025 are online ahead of schedule. So that's a quick note for you. In terms of the numbers themselves, Q3 net income coming in $1.16 billion US dollars, net debt just over $26 billion US dollars. We are looking at operating free cash flow of $7,786,000,000. In terms of the outlook here, and I think this is probably most interesting, BP outlook for 2025 reported upstream production to be slightly lower and underlying upstream production to be broadly flat compared to 2024. In terms of CapEx here, full year capital expenditure guidance continues to be around $14.5 billion. So that's pretty much where we were in terms of full year organic CapEx, remaining on track to be below $14 billion. So that's what we're hearing in terms of the CapEx guide. In terms of the dividend, BP expecting to increase a dividend per ordinary share of at least 4% per year. So continuing to return cash to shareholders. Also, they intend to execute $0.75 billion a share buyback prior to reporting Q4 results. So again, the cash return story remains at BP. And finally, in terms of the guidance here, BP continues to expect similar levels of refinery turnaround activity in 2025. So those are the quick numbers from BP. We are going to push on now to Philips, which also has just published some numbers that have crossed the wires.
We've got a raise here for the outlook. Philips raising its full-year outlook for margins expecting it to be at the upper end of its previous guidance. The company posted 4.3 billion euros in third quarter revenue, flagging strong order intake. Roy Jacobs joins us, the CEO of Philips. Roy, welcome back to the program. Thank you very much for joining us on the back of the numbers that have just landed this morning. You've mentioned comparable sales growth, 1 to 3% in the outlook, but it's the adjusted EBITDA margin that the market's picked up on straight away, 11.3 to 11.8%. That's the upper end of the guided range. Just give us a sense of what you're seeing in the business that gives you some confidence.
Yeah, thank you, and great to be back in the show. So if you look at the third quarter, we came in with a very strong 8% order intake growth, showing the demand for our AI-powered solutions. We also had a step up in sales to 3%, also on the back of a strong personal health performance. And then indeed, we had a very solid expansion of our margins in the quarter three, 50 basis points, despite the fact that we have now full tariff hitting us in Q3. And on the back of that good momentum that we have in Q3, that's also how we reiterated the sales and cash guidance for Q4 and full year, but then actually upped our margin range towards the upper end of kind of what we formerly guided, because we see that our mitigation plan on tariffs is working, but also the margins we are getting from the innovations that we have been actually providing to our customers. They're really generating good value, and therefore that combination gives us reassurance that actually we can end on the high on margin for the year.
As you talk about the full tariff impact hitting now, as I drill down into the North American numbers, I can see on a comparable basis up 5%, in fact outperforming most other regions. What are you witnessing in terms of the consumer strength still in the US market, even with the tariff hit?
Yeah, North America as a market still remains very strong. Actually, we have seen continued double-digit order intake growth, so the health systems are in a good position and they're investing to serve their patients better, and they do that with our strong platforms in monitoring, imaging and interventional. But also we have seen resilient demand from consumers. Actually, we have seen strong demand across the world, a bit subdued in China, but strong in Europe and very resilient in North America. So overall, we see North America really kind of driving the world's demand. And also we expect that to continue. And we are well positioned there, also have kept investing in there, for example, to mitigate some of the tariff exposure. We have been investing in the Reeves plant in North America. So that also helps to strengthen our supply chain delivery there. And we have been launching a lot of innovations in North America. We launched the consumer innovation of IPL, which is Interpulse Light solution, which is really something that appeals in the beauty category, but also, for example, in monitoring, where we have a real ecosystem approach, AI-driven, where we partner with others to streamline the workflow and work with the data of patients in a much more predictive manner.
Roy, let me ask you about diagnosis and treatment. You saw comparable sales grow over the period, but margins were down about 80 basis points. Can you talk to us about what's going on with margins there and what the margin story is more broadly, given the fact that with your guidance, you're now expecting margins to come in at the upper end of the previously given range?
Yeah, so in D&T, actually, we have also been expanding margin throughout the year. Now in Q3, they got also the full hit of margins, and actually there what is weighing in is some of the Europe tariffs that actually are reflected in the margin. But actually, if you look to Q4, we will be actually mitigating further. We will be also stepping it up across the company, and therefore you saw in Q3 as a totality, we were expanding the margins for the total portfolio, and we also continue to do that in Q4, and therefore we will continue to do that for the full year. And that actually mitigates then 150 to 200 million impact of tariffs. So this is not a small amount, but we're taking a lot of productivity and cost measures, as well as driving the sales and innovation pipeline that actually fuels better margins.
That's really interesting. Does that suggest that the margin hit you've taken in diagnosis and treatment is going to be a one-off, that we're going to see margins there also recover in Q4? Or that's just an overall margin story for the group?
Yes, that's true. We see that actually we will continue to, across the group, improve the margins also across the different segments. It's, of course, the mitigation of the different segments that takes maybe a bit of timing differences. But overall, we will be expanding in Q4. You will therefore see that we will be expanding margin. And also that helps us to guide then at the higher end for the full year.
Roy, we've spoken at length before about issues with the regulators, and there's been another one in the past week or so, the FDA finding that there were violations at 3 medical device facilities earlier this year. What can you say about that, and why are there still ongoing issues with regulators?
Yeah, so indeed we got a warning letter, and of course we take that very seriously. We are already in full mitigation because actually we got it early in the year. Just to put it a bit in context, we got 9 inspections this year, 6 were fully clean, 3 had findings, so it's clearly more work to do, but we are on those. They do not have any product implications, therefore we also said this will not have any commercial impact, but of course we will remediate the process element of it. And at the same time, we continue our journey in patient safety and quality, and on that note, actually it was good to see that this year, for example, we have gotten already 27 approvals from the FDA, where actually we have been working with them on new innovations, also a lot of AI innovations that we're bringing to market. And this is already more this year than the full of 2024. Also in some of the correction removal, so the field actions we are taking, we see a 20% reduction this year versus last year. And that was a 20% reduction in versus the year before. And if you look to our customers, actually I think the strength in order intake shows that their trust is in our innovations. Actually, they want more of them. The 8% is showing that, but also the sales growth is showing that. So we keep on our journey to improve our fundamentals. At the same time, we are dialing up our growth and margin delivery.
Just to the point around AI, and I want to pick up on that because it's been such an incredible story. And we look at the picks and shovels, the hyperscalers, but the next layer is what businesses like yours do with the AI. You've always been a very technology-driven company. But in 12 months' time, how different will your company look thanks to AI versus what it looks today?
Yeah, it's materially different. And I will tell you on 2 sides. On one, we keep bringing AI into our products that serve our customers. So, for example, we had a launch in ultrasound where this quarter we brought forward an innovation, Transcend, which actually reduces the scan time by 60% because it's using 26 AI agents to help doing the scan. So that's an example on the front end where we use it for customers to help to diagnose more patients. At the same time, 30% of our coding nowadays in enterprise informatics is being done with the help of AI and AI agents. So we're both improving the back end, our productivity, as well as that we use it to deliver more value to our customers. And that's an accelerating speed. And actually you mentioned before that actually there's a big deal with AWS and OpenAI. Actually, we're working with both of them to fuel us and our applications to actually deliver more value into the market. Because this is an ecosystem approach where you actually indeed say there are different players. We are the one that actually turn the models and the cloud into an application and a service to customers that really helps them to do their daily job in a different way, whether it's a scan, whether it's an intervention, or whether it's a prediction of a patient deterioration. That's how we actually bring it to life in the daily practice of a nurse, a doctor, and a technician. And at the same time, we use it to really drive our productivity, because one of the parts also that helps expand our margin, we have been in our total 3-year plan expanding our productivity plan from 2 billion to 2.5 billion. We're this year fully on track with our productivity, and more of that productivity is also coming out of the AI contribution towards that productivity.
Roy, really interesting to get insight there on how you're actually, using AI in the business. It's great to get some tangible insight. Let me shift to geopolitics, because clearly tariffs feature quite prominently, or certainly many times throughout your results today. You've taken a ton of mitigating actions, and you've been very transparent about the impact over the last several quarters. But just generally speaking, how are you thinking about navigating the current geopolitical environment when we have some clarity on tariffs, but still clearly there is uncertainty on the horizon? In particular, when it comes to U.S.-China, there's still a lot of uncertainty as to where the relationship goes from here. Yes, the relationship has become a lot more conciliatory in recent weeks, but still there is some murkiness on the horizon.
Yes, and I agree. The tariff landscape is not a stable one. Actually, it is causing continued turmoil. What we have learned, and also what we are showing through results, is we need to really focus on our controllables to make sure in this fast-changing world, we can adapt with agility and faster supply chain. For example, that's why we're investing in North America, but it's also why we invested before in China. And for example, how we can deliver already now in Indonesia some of the orders that we kind of got last quarter, we are executing now. We also need to be very proactive on taking countermeasures. That is the productivity plan. We expanded it this year from 2 billion to 2.5 billion. So actually we're taking also really productivity and cost measures. and making sure that we keep delivering to our customers, because that is the most important, to keep that delivery to the healthcare systems and our consumers really strong. And actually, through doing that, we get our orders and our sales stepping up. So actually, we are fully focusing on how to address it. And the last point is we are also still part of the debate around it, because we also say very strongly in the US, but also in Europe and China, every dollar spent on tariffs is one not spent on patient care. And patient care is already under enormous pressure. So we don't need, and especially doctors, nurses, and patients don't need additional pressure points. So if we can lower the pressure, it would be really beneficial. For the moment, we have to deal with the realities that we know. So with the current tariffs, we are mitigating them. It is substantial. 150 to 200 million is really substantial, but we are taking the measures to offset it.
Roy, we really appreciate the time as ever. Roy Jakobs, CEO of Philips. Coming up on the show, we're counting down to a highly anticipated and unusual press conference from UK Chancellor Rachel Reeves just 3 weeks ahead of her budget. Plus, Nintendo hikes its operating forecast to 370 billion yen amid mammoth demand for its Switch 2 console. And we'll hear from Edenred CEO Bertrand Dumazy ahead of the company's Capital Markets Day. Don't miss that conversation coming up at 8:30 London time. Welcome back to the program. Let's get a check on U.S. markets. Some really interesting action yesterday. We saw an acceleration in the Mag 7, 1.2% higher for the group overall, ultimately pushing the NASDAQ about 0.5% higher on the day. A lot of that propelled by the Amazon OpenAI tie-up. We're going to talk a lot more about that $38 billion deal later in the show. But just interesting to note that we saw further gains for the Mag 7, but the S&P minus the Mag 7 actually contracted on the day, down 0.3%. So we're seeing this divergence. Basically, investors opting to buy the tech giants, but at the expense of other stocks in the market. So will that trend continue? Let's discuss throughout the show. Dow Jones pulled back by about 0.5% on the session. In terms of European trade, yesterday the Stoxx 600 was little change. We saw some regional divergence, so the Xetra DAX gaining about 0.7% on the day, but the French and UK markets slipping. Now this morning we're looking at a pretty meaningful pullback in European markets, more than 1% for the CAC, the DAX, and the FTSE MIB. Interestingly, the FTSE 100 here in the UK looking to show a little bit more resilience, and I say interestingly because there's so much focus today on Rachel Reeves.
And we are expecting a major speech from UK Chancellor of the Exchequer, Rachel Reeves, this morning, just after the market open. A highly unusual intervention just weeks away from her budget on the 26th of this month. All this after Prime Minister Sir Keir Starmer faced MPs in Parliament yesterday and warned them of the need to make tough but fair decisions. Reeves is reportedly expected to address speculation she'll need to raise taxes amid a fiscal shortfall, believed to be in the tens of billions. I had a chance to speak to Reeves at the IMF's annual meetings in Washington, D.C. last month and asked her about her fiscal buffer.
The previous government took the fiscal headroom down to 6.5%, and so we have rebuilt it since then. Of course, increases in that buffer requires difficult choices elsewhere with tax or spending, but I do recognise that in a world of global volatility, particularly the volatility that we've seen over this last year, having that space is useful, but it does come with trade-offs, and I think that commentators need to reflect and recognise that too.
UK Chancellor Rachel Reeves there. Ritika joins us with more. Ritika, it is a significant announcement we're watching out for because it's unscheduled in the typical lineup as we count down to the budget. So whether she tackles some of the hard choices being income tax, more tax being paid broadly by the UK consumer, or whether it's the fiscal buffer that I raised with the Chancellor there, expanding that out to whether the volatile markets, in addition to the fact that we've got a BOE later this week. And a lot of market commentators were worried that we've got the BOE making a decision just weeks later and we get some sort of fiscal tightening, making it very difficult for the UK economy.
Yeah, you're right. And the Bank of England, broadly expected to hold, even though there are more calls now for a rate cut. But one of the reasons, of course, being the autumn budget, we don't know what she's going to announce. So this a major speech that is expected at 8 a.m. in Downing Street as the markets open. This is highly unprecedented, highly unusual to be done right before the budget. It's expected she's going to lay the groundwork for a so-called candid speech about the budget, where she's not going to repeat, apparently, that manifesto pledge on taxes. So again, that speculation, will she, won't she break the manifesto? This is what she is expected to address, the speculation about her budget, but falling short of actually announcing any policy changes. Now, senior strategists said that they are keen for this idea of pitch rolling these major changes before the budget to preempt the markets. That's something that they had done last year as well in the budget. But inside number 10, it's not necessarily the markets that they're worried about. They're more worried about the Labour MPs. We saw the U-turns that they had to do when it came to winter fuel payments, when it came to welfare payments as well. Now, it is expected that Rachel Reeves is going to be more optimistic about the economy, that she's going to paint a picture of the economy that isn't as gloomy as people think. Now, of course, she's had that the OBR is expected to downgrade the economy by or productivity by 0.3 percentage points. So, of course, leaving her with this big black hole to fill. But she's expected to say that they have had a bit more optimism when it comes to a fall in debt financing costs, more people coming into the jobs market, interest rate cuts, and some data that's been better than expected. Keir Starmer also gave us a taste of what's to come last night. He said that the warning of tough but fair decisions. She also said, I will make the choices necessary to deliver strong foundations for the economy for this year and years to come. Now, Karen, we were talking yesterday about these so-called tough decisions. She wants to raise billions if she wants to scrap that two-child benefit limit. She wants to protect NHS spending. So it's also expected that she's going to focus on the cost of living. We talked about cutting VAT on energy bills yesterday, as well as those changes to income tax, whether she raises it by 2p as well.
We spent all show trying to get to the ins and outs of it, Juliana. I mean, there was just fever pitch out there about the amount of measures that have been put forward, the changes to try and raise more revenue, trying to pay off debts and set the economy back on an even keel. And I think that is fascinating. That's been one of the issues. There's just been so much that is in the background. The question today, and I got the impression the other day when I spoke to the Chancellor, that everything was up in the air. She was not pre-committing to anything because there were no hard and fast decisions that had been made at that point. So the question today is whether the budget is actually done and dusted. Is it ready to go? And today will be some giveaways, actual signalling on those policy measures.
Well, on that point, it feels like today is a little bit of preemptive damage control to prepare the base. And to your point, Richika, this speech seems like it's more for the Labour Party, more for Labour voters than it is for the market, because the market already is expecting some sort of tax hike come November 26th. So it does feel like this is an opportunity to put these potential changes out there and potentially change course, to your point, Karen, before November 26th if the reaction is just too severe.
Can I just pick up on that point, though? Because you say the market. I think there's a split between how economists see what is necessary in the budget versus how businesses perceive the changes that are required. And I think they're really different. I spoke to a senior banker who was really worried that a lot of the measures are just tightening. There's a lack of growth potential here, and that is a challenge, a fiscal challenge for the UK economy more broadly. It brings risk. If you're tightening the screws so much on the economy, you're squeezing every little bit of growth potential out of the economy. Businesses see that as a concern. The Chancellor did touch on it to an extent in terms of how they regulate. But I guess the focus for her is on these hard and fast challenges around the numbers. And for business, that is a problem.
And exactly, on your point on businesses as well, even just delaying this budget to the end of the month, that's had more uncertainty. So that is more I guess, opportunity for businesses to hold back, to not invest. I think almost having that more time is got more, anxiety from businesses who I've been speaking to, who've been concerned about whether they are where the axe falls on again. And that's actually what's kind of creating this scenario where you have sluggish growth. Did she really think that we were going to be able to deliver more growth in just a few weeks when businesses are nervous about this and actually holding back spending and investment as well?
Well, Ritika, so much to talk about, and we're now just about half an hour, 45 minutes away from that speech, so we'll talk more about it later in the show. For more on what you can expect from Rachel Reeves this morning, I would encourage you to check out CNBC.com.
We've also got to plug into the big tech news overnight. OpenAI has signed a $38 billion deal with Amazon to use its AWS cloud infrastructure. The move will allow OpenAI to immediately start using NVIDIA's GPUs. It comes after Microsoft lost its preferential status with the ChatGPT maker under a new commercial agreement recently, allowing OpenAI to partner up with other hyperscalers. Amazon shares rose 4% on the news, closing at a record high and carrying on for what was a very strong earnings report the other week. Microsoft announced it received Washington's approval to export NVIDIA's chips to the UAE for the first time, with the tech giant aiming to increase its investment in the UAE to $15 billion by the end of 2029. Speaking to CNBC at the ADIPEC conference in Abu Dhabi, Microsoft President Brad Smith gave his take on whether AI is in a bubble.
I think the question that people often have is whether all of this investment in all of this capacity is going to yield a return for shareholders. Certainly at Microsoft, as we look to the foreseeable future, our greatest challenge is not the risk of getting ahead of demand, it's in keeping pace with demand. We have a very broad base of users, every government, all the large enterprises in most of the world's economies, nonprofit groups and the like. They depend on us. We need this capacity. Our customers are there. We need to keep moving faster to meet their needs.
So the spend continues.
It certainly does. Nothing lasts forever, but as we look to the foreseeable future, this is the right investment. This is the right time. We're focused on doubling our capacity of the most advanced AI data centers around the world. We don't have to worry about people not putting it to use. We have to worry about putting it in place so they can use it.